G'day folks, welcome back to another update for high-grade copper and US crude. Now both are consolidating on the daily chart at least. We'll include some back testing and also look out for any signs using Fibonacci levels or divergence. Hit that like and subscribe button to support the channel, and do reference the +1 videos where we do a deeper dive into some trading strategies and techniques which we may gloss over in today's video. In terms of the outlook, we've got copper structural tailwinds are strong, green energy, electrification and supply is challenged. That gives a generally positive longer term view, but near term risks inventory demand softness and suggests it's not free of downside. US crude oil, the fundamental picture is weaker. Supply growth is outpacing demand growth. Inventories are rising, so unless there's a shock or geopolitical or demand surge, the bias is toward lower sideways prices. So looking at US crude oil first, on the weekly chart, what we look for is the first thing is the price and the CCI are below the moving averages. So it's giving us a bearish momentum at the moment on the weekly. So if you're trading this on the daily time frame, you follow the weekly trend, which means short positions only. Next thing we look for is any divergence. Now what we look for is higher lows on the CCI versus lower lows on the price, and that's not the case here. There's no bullish divergence, nor is there any bearish divergence. On the daily chart for US crude, you can see there it's consolidating in that very narrow moving average range, and that's why I like using these multiple moving averages. I'd like to see the moving averages spread apart like they did here to confirm a downside. You can see there's another consolidation, and back here you want to see them separate apart again in terms of a bullish momentum, so that helps us determine the actual trend. But at the moment, consolidation, albeit the price is in that very narrow moving average range, and the CCI is broken into that range as well. This could go either way. When it consolidates, it could break higher or lower. We don't really know at this point. And that's why we look at the hourly chart as well. Gives us an idea where it's moving. And on the hourly, we did have a bit of a bullish move here, although notice the price has pulled back into that moving average range. Likewise, the CCI has broken into that range a few times and is currently in that range as well. So again, if you're thinking of trading this, I would avoid opening any trades until we see a more conclusive break to the upside in this case, if it's going long. Or alternatively, if you're going to go short, again, I'd like to see the daily resume and break to the downside if you're going on a daily chart. Now, in terms of the back test, we've started it going short from this period back here. You could have started from any one of these points. I'm just showing you one area as an example. Going short, back testing, you can see there going short, and I like to zoom out to see the moving averages. So when you see both price moving averages and CCI moving averages in a decline, that's a short positioning. And when you see them start breaking higher, like I did back here, you close out your positions. Again, going short in that little period, and then you again close it out when they break above into upward momentum. Again, avoid taking long trades so long as the daily is in a short position, or vice versa. And more recently, where we are at the moment, you can see there, again, as I said, on the hourly, it's broken to the upside and there should be no trades open. So here we have high-grade copper. Now on the weekly chart, first of all, the price is broken above the moving average. Again, the moving average range is fairly narrow, but still somewhat bullish. The CCI is also just above the moving average range, but possibly, again, this could go either way. And that's why we look at the daily chart. Now, there's no divergence in this little play here. There's no bearish or bullish divergence. We'll go to the daily chart. And again, you can see there, we've been consolidating very narrow moving average range. Again, this could go either way. The CCI has already broken into that moving average range, so avoid taking any trades until we see a more decisive move either way. Now, in terms of back testing, I'll show you the short positionings from that position. But let's go to the 1 hour time period first. So again, you can see breaking below there. You could have taken a short position there. Let's have a look at the daily for a moment. Yeah, that broke below there as well. So you could have taken, was at the right spot, 4th of November. Actually no, the 4th was back here. So you could have taken a short position back there, and more recently, if you're going short during that period, you could have taken a little short entry there, another one there, could have been a break even, and another one there. So looking at the back test, again going short from the 3rd of November there. Let's go to the short positioning back test. So going short during this little period, again notice there's a little bit of a bullish divergence versus lower lows on the price. So that was giving you an early warning to get out of any short positions once you see that bullish divergence happening, or the CCI starting to break up. Avoid taking any long trades. Remember, we're only going short again. And in this case, the price went sideways pretty much, and then closing it out at that point there, going short again. Avoid trading during that little period, and then going short again. Just one thing I want to mention as well, going back to the 1 hour chart. Back here around this period, notice as well we had another bearish divergence. So if you're going long during this period, we showed lower highs on the CCI versus slightly higher highs on the price. That's a bearish divergence. So even if you're going long in that little period and you start seeing the lower highs on the CCI during that period, you start getting ready to close out. So you would have closed out the very latest at that point. And if the daily was going short, then you start taking short trades. So that's why we look at the divergence as well, just to give you a bit of an early warning. Again, there's that bullish divergence I mentioned in the back test. Gives you an early warning to get out of the short positions for that one. If you'd like to get some share trading ideas, want to subscribe to the Patreon page. These are some of the sold securities or trades we've made since the 21st of September this year. So just a bit over a month. And you can see they've made a number of small trades, equating to about just a bit over $4,500 Aussie dollars in returns. And percentage returns that equated to 12.48% return. So not a bad little return since the 21st of September this year. So again, to support us on the Patreon page, go to the links in the description below where you can subscribe for a minimal cost each month. And that's where you can get some weekly bullish share scans returned back to you. Thanks for watching. Hit that like and subscribe button, and I'll speak to you in our next update.